And when he finally, belatedly, started to raise rates after claiming incorrectly that inflation was transitory, when he finally addressed the inflation problem, he was too late. I agree with Trump on that. But where I disagree with Trump is that he's too late to cut rates. What he was too early in doing was aborting the hikes. As I've said many times on the podcast, he never got into restrictive territory. And the way you know that is because debt never stopped expanding. Consumer credit, corporate credit, government debt continued to hit new all-time record highs despite the rate hikes. And that's because the rate hikes were not enough. The rate hikes weren't high enough to cause a contraction in credit. Because remember, inflation is not just the expansion of the money supply, contract, although not nearly as much, and now it's back in expansion mode. But credit not only didn't contract, but accelerated its growth. And so the inflation fire that the Fed lit was never put out. What Trump really wants Powell to do is throw more gasoline on that fire. And because he won't do it, people want him to resign. In fact, if you look at the most recent statement by Trump during the week in one of these, Q&As, that's where he thinks rates should be. 1%. He says, we deserve it. We should get it. And for some reason, this moron, this imbecile, Powell is refusing to go to 1%. Now, think about that, because Trump is also talking about how strong the U.S. economy is, how it's unprecedented in its strength. It is the hottest economy in the world, according to Trump. And not just today, but historically. To hear Donald Trump talk about the current U.S. economy, this is the strongest it's ever been. I guess it's even stronger than it was when he was president the first time. Now, if the economy is this strong, why should interest rates be at 1%? Especially, and I'm going to get into the CPI data that came out earlier in the week during the podcast, but the official CPI rate is much closer to 3%. And so given that inflation is well above the BS so-called target that the Fed has adopted, but if we have above target inflation and the strongest economy ever, why should rates be at 1%? The first time the Fed lowered interest rates to 1%, it was Alan Greenspan. And this was in 2003. Now, what was going on in 2003 that caused to lower rates to 1%, which was a mistake? And I criticized Greenspan for doing that back then when he did it. Because U.S. interest rates hadn't been 1% since 1950. And of course, in 1950, it was a whole different ballgame. I mean, we were on a gold standard. We had real money. We didn't have the national debt we have now. We did run up a big debt in World War II, but we were paying it down. But we had trade surpluses. I mean, we were totally back then than we are today. But that was the last time we had 1% interest rates, was 1950, before Greenspan brought them back down to 1% in 2003. But if you don't recall what was going on, first of all, we were in a recession. It was a mild recession, but we were in one. We had the September 11th, 2001 terrorist attack, the Twin Towers, knocking them down. Also, a plane went into the Pentagon. Another one crashed in a field. But we were at war, basically, Desert Storm or Desert Shield, whatever we called it. But we were having war with Iraq. And the NASDAQ was in a brutal bear market. The NASDAQ had dropped by 80% from its peak. I think the S&P 500 was about 50% off of its peak. So, we had a massive bear market. We had the bursting of the dot-com bubble. Greenspan brought interest rates to 1%. Now, he only left them at 1% for a year, despite all that stuff going on. They were only at 1% for a year. Now, the next mistake that Greenspan made was in normalizing rates too slowly. Remember, he was talking about a measured normalization because he was afraid of causing damage to the financial markets. Once he hooked them on the drug of 1% interest rates, he didn't want to take away that drug cold turkey. They would raise rates by about a quarter of a point. So it took 17 hikes, right? Years and years and years. So by 2006, the Fed was finally back at 4.5%. And that's it. That's as high as they got, right? And that's all it took to prick the housing bubble and usher in the 2008 financial crisis. But 4.5% is basically, that's where we are right now. That's the interest rate we have right now. That is still historically low. I mean, the only historical precedence you have for 1% is in the immediate aftermath of the bursting of the dot-com bubble, right, and that recession, and the aftermath of the 2008 financial crisis, where we went to zero. See, that time we didn't even go to 1. That wasn't even low enough. We had to go all the way to zero for way too long. And then Janet Yellen was much too slow in raising them. At least Powell picked up the pace from Yellen. Yellen had one hike. Basically, that was it. The whole time she was Fed chair, rate stayed at zero. And if you remember, when Donald Trump ran for president the first time, he called out Janet Yellen for leaving interest rates too low, of trying to help the Obama administration by artificially boosting the economy with low interest rates. Well, that's exactly what he wants Powell to do. That's exactly why he wants to fire Powell or get Powell to resign, maybe over the controversy of the renovation costs of the Fed's headquarters, but whatever. He wants to get rid of Powell because he won't do for him exactly what he criticized Yellen of doing for Obama. Again, another example of the Trump hypocrisy, the difference between Trump as a candidate and Trump as a president. Because remember, he's very consistent. He's a hypocrite, but he is consistently hypocritical, right? Because when he ran for office the first time, he kept looking at these government unemployment numbers, right? The official numbers, 4.5%, 5%. And he kept saying, these numbers are BS. The real rate of unemployment is 10%, 15%, 20%, 30%. Every time he gave a speech when Obama was president, and then used those very figures to tout the success of his own economic policies, because he said, look how low unemployment is. I'm doing great. And he's doing the same thing now. He's pointing to this bogus unemployment number and saying, hey, I've got the greatest economy. Look how low unemployment is, based on the same fake numbers, right? Or the numbers that he accused of being fake when he wasn't president. So he's doing the same thing with the Fed. He was correct to criticize Yellen for being too easy. He is incorrect in his criticism of Powell for being too tight. But I think Trump is probably smart enough to realize that the last thing he wants, and he doesn't want to fire him. I think Trump wants to keep Powell exactly where he is so he can use him as a foil, so he can blame whatever problems happen on Powell. And if Powell doesn't cut rates and we do have a problem, then Trump could say, I told you so. I wanted to fire him, but I couldn't do it, right? If he does fire him, or if Powell resigns on his own, or, from pressure, now what? Now Trump's going to put in a yes man to take his place. But now anything that guy does, or gal, although the front runner is this guy, Kevin Walsh, but whatever, he's going to have to accept responsibility, because it's the person that he just put in to take his place. So I think it's much better for Trump to just keep Powell where he is. Plus, if Powell does step down, you do risk a reaction in the markets. Although the markets don't seem to be reacting very much to the possibility. Maybe they just think the same way that I do, that it's all just a bunch of talk, like a lot of the tariffs. They believe the tariffs are talk, and I'm going to get to that later. But I would agree. I think it's just talk, but I think it's also damaging the perception of Fed credibility. Because, I think if Powell were to step down, or even when Powell finishes his term, is a bad choice. He was a FOMC member right after the 2008 financial crisis. He was there before the crisis. He was there, I think, from 2006 to 2011. So he didn't see the crisis coming, right? I saw it from a mile away, so he doesn't really know his stuff. But he was really like the liaison between the Fed and Wall Street during all the bailouts. Everything the Fed did wrong following the 2008 financial crisis that it caused made the problem worse. So Walsh was at the Fed when they were laying the foundation for the 2008 financial crisis. And then he was at the Fed when they made all the mistakes with all the Wall Street and bank bailouts, right? So as far as I'm concerned, he's a horrible candidate, and he's at the top of the short list to replace Powell. But let's say this guy comes in and everybody believes he's just a yes man. And in fact, he did an interview this week in which he stated that he believes that there should actually be a partnership, an official partnership between the chairman of the Fed and the Secretary of the Treasury, that they should work together, which is a horrible idea. Now, I think they have been, kind of de facto partners, and they certainly were, I think, during the years after the 2008 financial crisis. It was pretty clear that they were acting hand in glove to me. But if you make it official, if you actually say, hey, the Fed chair and the Secretary of the Treasury are working together as partners, well, you've completely destroyed even the appearance of credibility of Fed independence. And that's really all the dollar has. It doesn't have any real backing anymore. It's not defined by gold and silver, technically, the way it is in the Constitution and the way it was up until 1971. It's a pure fiat currency. And we have massive trade deficits and budget deficits. So the only thing the dollar's got is its reputation. And that's built on confidence. That's built on trust. I think it's misplaced confidence and trust. But a lot of it stems from the supposed independence between the Federal Reserve and the government. If you destroy even that pretense by officially proclaiming this partnership between the Fed chairman and the Powell, well then, or between the Fed chairman and the Secretary of Treasury, what do you got left? You got nothing. And I think it would be a dangerous